All right, cool. We're good to go.
All right, we're live.
Yes. So you
All
want
right.
to talk about welfare?
Yeah, I'm opposed to any sort of, redistribution to, welfare. I think we understand the definition, right?
Yeah. No. Yeah. I think we have a
All right,
pretty.
I have an opening statement if you want me to just read it off.
Yeah. Please.
All right, sure. So, my argument against welfare is that it's contradictory to the aims of reducing poverty. To understand this, we must understand poverty. Poverty is caused when a certain group of people are not allotted the resources necessary to meet basic needs. Thus, the cure for poverty is to produce these goods necessary for survival. A free market does this process automatically due to the innovative pursuits of mass production, entrepreneur, and constantly finding new ways to prices so that the masses may have access to said products. This effect is what happened during the Industrial Revolution, where factories produced needs for the poor and common man. This process of production also requires labor, and so job openings are created for workers to fill. This is well established by both the World Bank and independent research that economic growth has a positive impact on poverty. And this process happens most efficiently in the system where there's minimal barriers to production and entrepreneurship. On the other hand, welfare is ineffective because it requires taxation, which impedes this process. Economist Hans Hermann Hoppe summarized it best when he says, by taking part of the income from the producer away from the owner-producer, however small that may be, and giving it to people who do not produce, in question, the costs of production rise and the costs of non-producing or undergoing production fall, however slightly. As a consequence, there will be less production and less investment. And I would also like to make the argument that welfare is just ineffective at reducing poverty because it incentivizes people to stay in poverty and it keeps them in a cycle of poverty. And I have studies to support that as well. So if you want an opening statement, you can go.
Yeah, I don't necessarily have an opening statement, but I can definitely address some of the things you laid out in your.
Yeah, go ahead.
Well, I mean, you said that a free market can alleviate poverty, but I mean, we know that just from history that is just not the case. There are many people in poverty, and you can say that industrialization has led to a reduction in poverty, but I don't think that that's synonymous with not having a welfare state. I think
I think we should back up a little. So how are you defining poverty when you say it failed to alleviate poverty in the past?
I think that it has. Well, what do you mean? How am I defining? I mean, I use just basically the general metric. I mean, we can look at like the international standard for poverty, or we can look at the standard for the U.S. I think it's a somewhat arbitrary term. So
yeah,
I mean,
I agree.
You'd like to go off of?
Well, I like to go off of more, like materialistic things, sort of like, rates of malnutrition or rates of homelessness or child mortality. I think these things give us better.
All of that being lower in states like, or in the Scandinavian countries that have a robust welfare state, and then the taxes that you're referring to, but they also do rather well in terms of economic development.
Well, I would say oh wait, how would I put this? Okay, well, I would say that you're sort of attributing to the welfare state that the Scandinavian countries have lower rates of child mortality. There's a lot of differences between.
I can bring up child mortality. I just brought up. I mean, you brought up like malnutrition. You brought up all sorts of homelessness.
Yeah. Well, you're just attributing these factors to the Scandinavian countries' welfare state, which I think is a little disingenuous. For example, they also have balanced budgets and they also have less business regulations. So, I mean,
that's a little misleading. We have a ton of like redundant regulations because of the way our system's set up with like local regulations, state regulations, federal regulations. Yeah. It's more streamlined in the Scandinavian. So it's a little. I mean, they have much better environmental standards. They have better labor laws. They have actually a ton of stuff that I think it's misleading to say that they have less regulation.
Okay, sure, but again, I still think you can't attribute like the welfare state to this child mortality just because there's so many different factors. And the book Debunking Utopia goes over, like Scandinavia just has higher rates of social trust as well. They have higher rates of They have
what do you mean by social trust?
Well, for example, like Swedish people in America have lower rates of poverty than Swedish people in Sweden. So like
high barrier to entry when it comes to immigration.
What would that have to do with anything?
Well, people have to be better well off economically to immigrate here. Then that would imply that they're going to probably do better when they get here because they're coming in at a higher point.
Okay, well, again, when we're looking at the culture, we see that Scandinavian people just volunteer a lot more, and they're going to help their people.
I'm saying that if people are coming, people that are more well off economically volunteer more. So if people that are coming here from Sweden tend to be of higher wealth already, it's really misleading to say, oh, it's because of their culture that they're doing better. It's because they're more well off. Now, if you look at the bottom, what were we going to say?
Well, I don't think welfare drives culture. I mean, we spend like more, I mean, the U.S. spends more on than most other countries on welfare, and like it's not necessarily.
No, that's not true. I believe France spends more than.
Well, actually depends on how you measure it. Like,
okay,
but
how are you measuring it?
Oh, there was something I saw in an article. I can pull up article, but like to say like America has like less welfare than these countries, it's just like it depends on the measurement. But I don't think that welfare drives culture. I think it's primarily an issue of, like I think
I wasn't saying that welfare drives culture. I was saying that I don't think that they just have a better culture in Sweden. I think it's misleading.
Well, I mean, we can look at the data, which he indicated in the book. I mean, I should have had it pulled up, so that's kind of my bad. But I mean, he just explains basically like they have balanced budgets. There's so many like different reasons than that Sweden is different to America. So I mean, it's just you can't attribute this to the welfare state.
Wait. If we're talking about the fact that nobody goes bankrupt due to healthcare expenses in Scandinavia, I think that's absolutely a product of the welfare state.
Okay, well, I would say the medical bankrupt. Well, okay, so first of all, I would say that, how do I put this? Like, yes, Scandinavia's welfare state does prevent that, but I think most of the medical bankruptcies happen as a result of overregulations and lack of competition.
But
so
how does that make any sense when they have a more regulated welfare system and they have no medical bankruptcy?
Well, they don't have a more regulated welfare system. They have a nationalized welfare system.
Oh, they have a national healthcare system. I would say that there's more government involvement. That is about as regulated as you can get because the government just does it.
Well, that's not really, when I'm talking about regulated, I talk about specifically regulations on private industry. I don't mean like government
involvement. What regulation here is causing people to go bankrupt for medical?
Certificate of need laws that prevent new hospitals from opening, so that it drives up the price, and it reduces competition.
You don't think that there should be standards for like setting up a hospital?
Certificate of needs laws are just, I mean, I think the standards would be set by the market, and certificate of need laws are just exploited by the biggest hospitals in order to shut down their competition.
No, you can't just have like the market set the standards for regulation, because that's going to lead to disaster. I mean, if you just
disaster?
Well, say for example, if we didn't have certain regulations, you would have doctors that maybe don't know what they're doing that would try to practice care, and then people would have.
Okay. So generally, this concern isn't really very well founded, because if we look at things like Target also has electricity.
You mean like the retail store?
Yeah, well, this is analogous. I'll explain why. So Target has electronics, and even though no government like there's certain things that even though they pass government compliance, they still hire and they spend billions of dollars each year on getting it approved by private appraisal companies like UL to get that certification, because people will only buy from Target if they have that certification. So yes, the private market can fix this on its own, and like we have things like
that's analogous to healthcare, because healthcare is a very inelastic demand. Like people need healthcare. You don't have the same luxury of like shopping around for your electronics as you do for you just don't have that luxury with healthcare. If you need if you have some sort of urgent care that you need, you really don't get to choose, well, which hospital is better. There's usually not a whole lot in one area, and it just wouldn't be economical to have a whole lot in one area. And so it doesn't really, the idea that the market, that people have the same ability to choose, it doesn't bear out with like things that are more inelastic in demand.
Yeah, well, I think inelastic demand doesn't necessarily refute the concept, because demand cannot be perfectly inelastic. So there's a certain point where competitors still have to pay like.
I mean, that's pretty inelastic.
Well, again, it's not perfectly inelastic, so let me explain. So if we take a commodity, for example, like say, I don't know, a surgery you need, like there's a certain point where people just aren't going to pay, and then the hospital has to go below that point. So like you can't just charge infinitely, and you can't just raise prices infinitely. And we see in other inelastic industries like gas that it declines naturally over time, the price.
I would not say that gas is as inelastic as healthcare, because you don't die. Well, I would say that it is more inelastic than like electronics, but I think that there are degrees to these things. I think that if you die without it, it becomes rather inelastic.
Again, but inelastic demand doesn't refute the concept.
It refutes the idea that like people can just shop around for these things in the same way that they can for their Game Boys at Target.
Well, again, if we're talking about healthcare, it would already be well, first of all, there's charity we can talk about, but before we even get into that, like you would have a premium. You already have things and deals set up beforehand with the hospital, and like most stuff, like well, insurance for the most like extreme conditions, but like you would like most things, like if you have just like a cut, you could just like shop around and go to the hospital. But like if it's like a catastrophic injury, then you would have insurance.
Okay, I mean, yeah, I'm not really talking about people that need to go to the hospital because of a cut. I'm talking about these.
Well, not cut is a bad example. Like anything, like they need a like if they have COVID or something, like I mean, they're not like passed out. You know, they can still go to the hospital and shop around.
Not really. No, I mean, how many hospitals do you think that there would be in like an area if we had a totally unregulated market? How many like hospitals do you think there'd be in like a small town?
I mean, I cannot predict the market. That's the entire reason why a market exists. But I would say there would be sufficient amounts for competition as indicated by, history as well as what the regulations have done.
What do you mean by so we straight away we've gotten kind of down the road of health.
Yeah, and
we're talking more broadly about welfare. I mean, I think that a perfect example of welfare working rather well is Social Security. I believe 1/3 of seniors lived in abject poverty prior to the inception of Social Security. We just don't have that problem anymore. And today, I believe it's 20% of seniors rely on Social Security for 100% of their income. It's shown that the trend has stayed pretty steady. That if we didn't have Social Security, there'd be a large percentage of seniors that live in poverty.
Okay, well, I have a response to that, which is that this is sort of misleading because these seniors already put their money into Social Security. So if we look at, for example, Chile, which privatized their pension system, their pensions grow at about 12% each year, which Social Security ebbs and flows, but right now Social Security grows about 6% each year. So Chile, they put private pensions and they doubled the rate where they appreciate it.
It's much more risky to privatize your savings. I mean, what if you just lose all of it?
You're not going to lose all of it. You can diversify your investments. And I mean,
anyone with any meaningful understanding of like investments will tell you that there's very little things that are 100%. I mean, yes, sure, you can diversify, but then your rate of growth is going to be lower. If you're going to talk,
but we're giving people the option. And again, as long as it's growing faster than Social Security, then we're keeping people out of poverty. So that's a good thing.
No, because if it's a more volatile system that we're talking about. Because I mean, you can say that but prior to Social Security, how do you explain the fact that 30% of seniors lived in poverty?
Wait, okay, what is this? Again, I'm talking about how the fact that I talked about this earlier. We can't use like income as a good poverty line because it doesn't actually tell us about the conditions. So we're 30% of like social seniors like homeless. We're 30% of them, like
they were below the poverty line that was set, whatever it was prior to Social Security.
Yeah, but that again, this is my entire point. That poverty line is arbitrary and it doesn't tell us about.
It's arbitrary, but I don't remember you saying what you said. Some sort of materialistic basis. You didn't really say what your definition.
Well, again, I said like malnutrition, homelessness, child mortality, which wouldn't apply in this case, or like electricity is actually a good metric as well. So if they have electricity, that would be good.
Why is income like not a general way of measuring poverty? Like how impoverished someone is?
Because people can have addictions or they can be in debt. So if they're in debt or they're addicted, like they're not spending on.
1/3 of seniors, they were in poverty because they were addicted to something.
No, that's not what I'm saying. I'm just saying I'm just saying that income is generally a bad way of measuring poverty, and the other reason is because there's different ways of measuring income.
But we have a pretty uniform way of measuring poverty within the United States, and so a third of seniors lived in. We can look up what the exact standards were, I guess, for poverty. Yes. I don't understand what this is like. If they have electricity, that means someone can't be in poverty.
Wait, hold on. Wait.
Let's see. Okay.
Oh, sorry. Okay, I'm back. Wait, what were we talking about? We were talking about Social Security.
About Social Security with poverty.
Okay. Well, my point is, income can be measured in multiple ways. So there was a debate. What?
What are a few of the ways that it could be measured where you think if it was measured in this way, it would negate what I'm saying about poverty? Like what is one way that it could be measured where it becomes irrelevant to talk about poverty?
I don't understand what you mean by irrelevant to talk about poverty.
When you're saying that you can't use poverty as a standard because income can be measured in different ways, I'm asking what way can you measure income where it becomes.
So there's two ways of measuring income. One is survey data. So we take surveys of people in poverty and then we say attribute that to the rest of the country. And the second way is statistical modeling, which is what I think the government does, where we take expectations of what it would cost, like the consumer price index, and then we run a calculation, which is generally pretty inaccurate when compared to survey data. So
all right. I suppose. The stuff I'm looking at here says roughly 1/2 of seniors were estimated to be poor prior to the inception of Social Security.
What source is that?
This is, let's see, I can send it to you in the chat.
Yeah, go ahead.
This is the National Academy of Social Insurance. I've honestly never looked at it before, but
okay, that's fine.
I just Googled. There you go.
And okay, so like by these like metrics, like most people would be in poverty during the Industrial Revolution, but like obviously since that was the average living standard, we have like different metrics. So like today we sort of think about poverty differently than we did back then. So I mean,
but in terms of a general thing, I think that if we're talking about poverty, even if you don't think poverty is as precise of a measurement, we can see that poverty, even if you don't think it's a perfect measurement, is almost non-existent in terms of the elderly in the way that it was prior to Social Security.
Well, this concerns what we were debating earlier, which was
the pretty big differences. Like that we're not talking about like stuff around the margins. I mean, we're talking, like the source I had heard was 1/3. The site that I just sent you said it was half of seniors were considered prior to Social Security. It's just not the case anymore.
I don't have time to look at the methodology of your study, so I'm gonna have to assume it. But again, this just concerns what we were debating earlier, which is the privatization of pensions. So I mean, again, if Social Security, sure, it could lift these people out of poverty, but what you're not seeing is the unseen effects, is like the opportunity cost of how much money would be lost because they don't have private pensions.
But if the market would just solve everything, like why did we have this gigantic problem prior to the inception of Social Security? If the market would have solved, like what was stopping the market from solving it back then?
Well, again, this turns back into the debate about poverty lines, which I think this idea of an income-based poverty line
isn't measured exactly, but when we're talking about a half of the same thing, that poverty is 100% higher, or 100% higher than it should be. That would still mean that a quarter of seniors were living in like ridiculously low standards. Like I mean,
well, you don't know that based on income. Like you would have to look again, like rates of electrification or like homelessness rates, which like I don't know what the data on that is, but
who has electricity? Why is that? Because as things become more industrialized, like people will be easier to have access to electricity. That's why poverty does need to change.
Exactly.
Certain ability to have like certain like consumer goods, or I guess electricity is a consumer good, but you can't do it by that standard, because like as we become more developed, then like no one would be like in poverty because things have just become more. But it doesn't make sense to measure.
That's why. Okay, that critique doesn't really apply because we could just change the measurement. Wait, hold on. Oh, sorry, my thing's glitching. So you said, we would have to change the metric, every 10 years or whatever, but like we can just change the metric. So, after we move on to, I guess, a new phase of innovation and industrialization, we can just use a different metric of measuring poverty.
Okay. If you're saying that we need to look at like how I know you're not just saying electrification.
No.
You have standards that you're talking about where we can measure what the like poverty has been over time, or are you just using that as a way to obfuscate from like the rates of poverty that we have right now?
I'm not trying to obfuscate, I promise. I just think that these income-based whatever isn't a good reflection of the actual conditions.
Show me a standard then that we can look at for elderly people. Like, show me, like, what do you have anything to talk about elderly people or just people in general? Like,
rates of homelessness, for example, would be a good one.
Okay, our homelessness rates not fairly high in the U.S. right now.
Homelessness rates are really high, yes, and that just demonstrates that the welfare state isn't working because we spend a lot of money.
How do you feel like the welfare state that we have right now has like attempted to tackle like homelessness? I feel like it's done a pretty atrocious job, in my opinion. I'm not defending the way that the U.S. does welfare. I think that we do it. We have a very a system that's overburdened with administrative costs. I don't think that the U.S. does it very well. But if we look at countries that have a much more successful welfare state, like Norway, Denmark, Sweden, you see that that's not the case.
Okay, well, I would actually agree with you that the U.S. welfare state is bad because.
But it's better than nothing, though. That's what I'm saying. I will say that the U.S. welfare system isn't perfect, but it does have things that are incredible, like Medicaid, Social Security, that have done like pretty phenomenal things, and people would be living much worse today if we didn't have them.
Well, okay, there's a lot to pick out here. So, you said like Sweden and Denmark and all these nations are, more successful results than us. However, again, this just ties back to the claim I brought up earlier about debunking utopia. Like, you can't just attribute these factors to Denmark and Norway and Sweden when they have a lot of differences to us. Like, again, they have balanced budgets as well. And
how does that affect what we're talking about here? Whether or not
Well, because deficits have higher interest rates, which in turn, reduces economic growth, and that also it increases interest rates, which reduces economic growth, which was my entire point about economic growth reduces poverty.
Okay, but so
if they have
balanced budget and they could potentially have better interest rates because of that, that doesn't just alleviate how much we can see the tremendous successes of the welfare state in Scandinavia.
Tremendous. Well, again, you keep attributing it to this, which is like complex factors.
Budget and some vague gesture to culture. Like, what exactly are the like?
Well, vague. It's not a vague gesture. It's like they volunteer more. They have different customs which influence their standard of living.
But what exactly is different about their culture that makes it so much that they're so much more successful?
So they have higher rates of social trust, so they volunteer more and they donate more.
And you're just saying that like, oh, someone will volunteer more though if they're more well off economic. Like this is like a self-fulfilling prophecy right here. Like, oh, they volunteer more, that's what they're doing better economically. People can volunteer more when they're doing better economically.
Again, that just demonstrates that these are complex things you can't attribute to the welfare state.
No, that doesn't demonstrate that they're complex. It's saying, oh, just because they volunteer more, but that's not why this is happening. Without these welfare states, they would not be in the position that they are today.
Well, these are just the things I know, like off the top of my head. Like again, Debunking Utopia is like a 300-page book about all the ways like they're different to America and how that affects their standard of living. So, I mean, just because I agree with you that I should have read the book beforehand before getting into this debate, but like, I mean, just the fact that this book exists demonstrates that like.
I think that there are many people that have an interest in not having that have a financial interest in not having a welfare state because they think it will benefit them personally financially. I don't think that just exists. Like just because a book exists that is trying to debunk welfare, that means welfare doesn't work.
Well, it's not debunking welfare. It's just demonstrating how Scandinavia's culture influences their standard of living.
But people can write books about all sorts of things. That doesn't like necessitate the fact that what they're saying in the book is valid.
Well, again, I could just say the same thing about like all of your sources that like, oh, they could just manipulate the poverty line for Social Security.
If this book exists, that means it must not be the thing. Like it must not be working.
Well, that's not really what I'm saying. I'm saying the book
data.
I'm saying the book presents data in it, and again, I didn't read it, so I'm sort of going off the top of my head. But like the book does present data that like the culture of Scandinavia is very important to how they function in their standard of living. So, I mean, it's just a source.
I suppose I will definitely look into the book, but I think that
I will as well.
I think that we need more than just saying they have a better culture in Scandinavia. I think that generally just used as a way of just kind of brushing aside did they just they just naturally better over there when they have free college, not just like free college and free healthcare.
It's not really free. It's just subsidized.
They have free college and free healthcare.
Well, nothing is free. It's just paid by the government.
Free at the point of service.
Yeah, sure.
I mean, we never say like, what did it cost money for you to like join the stream? No, it was free to do it. Like to say that like nothing is free is just like
that's true.
Weird semantic argument to try to make, in my opinion.
Yeah, sure. Okay. So wait, did you want to move on to something else?
Sure.
Okay. I don't know. I mean, I have some. I don't know. What did you want to talk about?
I think that Social Security is the best thing that I would point to. I think that Medicare and Medicaid have been rather successful. I think you can talk about the fact that I think Medicare they spend less on administrative costs than private insurance, and I think that that's a fairly good signifier that the government can be more efficient than private industry.
All right. Well, I would say we can talk about these one by one. So starting with Medicare, I think Medicare. And there's evidence to support this, massively increased hospital costs for the average consumer, which ended up leading to, reductions in output, which led to increases in prices. And it also shut down a lot of hospital competition, which studies indicate as well.
So hasn't the cost of Medicare risen at a slower rate than the cost of private insurance?
So when I'm talking about the cost of Medicare, I mean the inflationary costs that Medicare like attributed to healthcare. So like the costs of administering health insurance increase because of all the administrative costs due to Medicare.
But I mean, they have less administrative costs as a percentage of spending than private insurance, and their costs have risen at a slower rate than private insurance.
Well, again, private insurance is heavily regulated, so I don't think that's very fair.
What we're comparing it to? Well, what standard can we compare it to then?
What standard we could compare it to? Before. Like, I think a good standard for measuring the quality of a healthcare system throughout time is hospital beds per person, because if we look at like life expectancy will rise over time because of innovation. So whatever is most recent will look most appealing. So we can compare it to like how much like assets were attributed to each person in the hospital. And we saw that after the advent of Medicare, it like the amount of hospital beds per person like decreased because the hospitals are spending more money on administration.
No, I've never used this metric to look at the success of it seems like a very niche thing that someone might point to measure because it might be like a one specific thing where things might be slightly worse off because of Medicare. Like, could you more fundamentally explain why hospital beds per person makes more sense than say looking at like preventable deaths, for example? Like preventable deaths are the main comparable nations with universal healthcare.
Well, the main reason is innovation. Innovation increases over time. So we can't, because if we're comparing two systems throughout time, so if we're comparing pre-Medicare America and post-Medicare America, obviously America after Medicare is going to look a lot better because there's been innovations since, you know, the incept of Medicare. So if we can compare life expectancy today versus 50 years ago.
I mean, it's not just the life expectancy, it's the number of people with health insurance. I mean, the people without health, the people that had no coverage was a lot higher prior to Medicare and Medicaid.
Well, okay, that's what I'm saying is not specifically hospital beds per person, but just the general idea of how many people are receiving care is generally a good way of measuring the quality of a healthcare system.
I think that it's a fine thing. I believe, if I'm not mistaken, like if we look at doctors per capita, it's much higher in nations that have universal healthcare.
Nations with universal healthcare. Well, again, this is the fallacy of comparing it to our current system, which I'm proposing a more free market oriented system, which of course America is not. So that's why it's
closer to what you're advocating for than a universal. Like America would be the closest nation that is the closest to what you're advocating.
Well, we can look in history when America had less regulations and then compare that to, you know, today's nations.
Right, so what's a year that you want to point to?
Let me pull up. Hold on. Just give me 1 second. Should I close it? Like, again, if we're going off the standard which I talked about, which is, you know, healthcare allocated to people, then let's see. I think like the 1920s is probably a good example, just because it was before a lot of the destructive regulations.
Well, it's also before the Great Depression when things really went downhill, wasn't it?
Well, yes, but again,
a byproduct of lack of regulation in the 1920s.
No, I would not attribute the Great Depression to lack of regulations. I would say it's due to credit expansions which started in the 1920s, which were unsustainable.
I don't think that most people would. That's how many people would attribute the Great Depression.
I would attribute it.
What year in the 1920s? Because I want to look up like what the numbers that we're talking about. What year in the 1920s?
We can look at
or like
1920. We can just look at 1920.
All right, so 1920. So what would I look up? Like hospital beds per capita?
Actually, wait. You would look up like price of care.
Source maybe that you can show me?
Do I have what?
Do you have a source that maybe you can link me?
Yeah, I do.
Okay.
I have multiple. But... Yeah. Okay, here's one. So yeah, there you go. So this looks at price as well as, you know, and this is like more focused on Medicare. It's from Milton. It's one of the studies conducted by Milton Friedman.
Okay, I've found Milton Friedman, but that's
all right.
Paper now. As recently as 1920, over 1/4 of all adult Americans were a member of fraternal society. It's talking about like frats. Where exactly? I don't see a whole lot of numbers in this. Where exactly?
If you go to, where is it? Is it here?
It's a pretty short page.
Yeah, it is. You're right. I have a longer study as well.
Okay. Well, this doesn't look like it cites any data whatsoever.
It does, but again, this is more like.
Well, in this source, what data is it?
It says at the bottom, but here's a better source.
It's a bibliography, but in the text, it doesn't talk about any.
Yeah. All right. This one cites its sources.
Okay, there we go. So healthcare crisis. Artificial scarcity. Okay.
And it talks about healthcare coverage in the UK before the NHS.
Okay, so we're talking about the UK. Okay, so what should I like Control F in this document to find what you're talking about?
Go to. Where is it? Go to page 5. It should be like the third paragraph.
Page 5. Okay, 1 second. 1, 2, 3, 4, part, the Tredegar Medical Association?
No, like that part up to where it says 12 million covered by the National Insurance Act in 1911.
Okay,
that talks about healthcare coverage.
Can you talk about the UK?
Yeah, but that's actually more analogous because you are in favor of a universal healthcare system.
Yeah, the NHS isn't quite like what Medicare for all is, because Medicare for all gets rid of private insurance, which is the NHS government healthcare. But I think that the NHS is largely a pretty good system. All right. 3.8 million, 7 million workers were insured against sickness, registered friendly policy, belongs to unregistered society. Membership in registered friendly societies grew. So I'm a little. So this is talking about insured. I don't even see how this would be everyone is insured in the UK now.
That doesn't. Okay.
Well, this is talking about the number of people insured with insurance coverage, right?
Yes.
So I mean, it's pretty. Unless the number that you're pointing to prior to the NHS is 100%, I don't see how number of people insured is a good metric to look at prior to. I mean, I'm just saying I don't see how that's a good metric at all, because everybody is insured in the UK now. You could say like 80% of the population was insured prior to the NHS. At least 20% uninsured. Even if it's 90%, that's 10% uninsured. Like I think that is.
Yeah. So when we're talking about
insurance coverage,
what?
You're going.
Okay. So again, this was what I was sort of referring to earlier, but you said it was kind of a, like a niche statistic. So if we look at people insured, then yeah, you can have the worst quality of care, but everyone's insured. But if we look at other metrics like
it's a bit because they don't have the worst quality care though. The NHS actually has rather good health care.
Well, good quality care, yes, but again, compared to my ideal system, I think a free market would have much better care. And again, all of this is concerning the idea of we need to look at case studies, which normally I think logic is superior to experience. But if we look at statistics, again, I brought up earlier is hospital beds per person. So inside of the hospital, how much money is going to administrative costs, and how much is going to actual people?
But that's the study. That's the source that I wanted. Is the thing about hospital beds per person. This thing you said.
That's a Milton Friedman one, but it looks at America, so it actually looks at the admin of Medicare.
Doesn't talk about any data.
Yes, he does. Wait, look at just go to the third page.
The third page, maybe it's a different thing. There's
okay.
one page in this thing.
Is it,
and
okay.
It talks about
that should be PDF.
It's a PDF, but it's just one page.
Oh, for me, it's not. For me, it's 12 pages of
the Milton Friedman?
Yeah, Milton Friedman thing.
The freenation.org thing.
No, not Free Nation. The Milton Friedman Hoover.Friedman. Images collection.
Oh, okay. Now I'm looking at the. Okay.
Yeah.
I see that. You got it. Okay. I don't know what the Free Nation one was. Okay.
Okay, right. That was just like a blog.
Look up in the. Okay, this is much different. I apologize.
Yeah, you're good. We can look at just figure 1 at that really says everything.
Okay.
But again, there's a lot of data to look at in that article.
Let's see. Yeah, percentage of beds occupied. And then I wonder. I'm interested what beds per population is. Percentage percent. I mean, okay, here we go. Physicians number per 100,000. Well, it looks like, I mean, if I'm reading this right, substantially more doctors per person today.
Again, but we had a larger population as well. And we had...
That's why you look at doctors per person.
Well, I know, but also we had, skyrocketing education rates. Again, we can't attribute this simply to, to Medicare.
Wait. You're saying skyrocketing education rates is why we have...
Well, not skyrocketing, but I mean, it's certainly we had more education. Like, what year was this? I mean, 1946, we had more education than like in the 1960s, we had more people graduating college than the 1940s. I mean, of course, especially since that was, still after the Great Depression.
I mean, I think that, largely, the government subsidizes college education. But I think
that this is a different debate entirely, but I would say that government subsidy of education are mostly what caused the student loan crisis, but go on.
Yeah, I would definitely heavily disagree with that. But yeah,
right, sure.
It's a bit of a different debate. So 1923, it says there was 130 physicians per 100,000 people. 1989, it says there was 252. It's almost double.
Mm-hmm. Wait, okay, that's table 1, right?
Yes, this is table 1.
So again, this is what I kept referring back to is logic should be triumphant over experience. So a lot of this is just attributing multiple
source. And then
well, you asked for the source, which is why I provided it. Like,
yeah, but then I mean, I suppose I did ask for the source. That's fair.
Yeah.
So what is this? So wait, if you're, is this like a way of saying like if the data contradicts like the
No, that's not what I'm saying. I'm saying so I mean I had the data there, but again, like what I'm saying is logic should be triumphant over experience. Like this is just like epistemology.
Okay, but I mean, logically, I could say that if you provide people with a bare minimum standard of living through welfare, they're going to do better. I mean, what exactly are we saying here? Like, what logical conclusions have you drawn that make that?
I drew from logical conclusions that economic growth is the best way to alleviate poverty, and that taxes disincentivize it, and thus they increase poverty.
I don't disagree that innovation leads to a reduction in poverty. I don't think that it's not like you don't have that if you have welfare.
Wait, yes, you do, because you discourage the production process.
How does it destroy the production process to have welfare?
It discourages. It doesn't destroy the production process, but what it does.
It destroys the production process.
I said discourages.
Oh, okay,
so what it does is it takes people who produce and takes people who don't produce. It takes from the people who produce and gives it to the people who don't produce.
It's a little hard for someone to produce if they have no financial means whatsoever. If someone is in poverty, it's hard to say, for the people who don't produce. It's like a little hard to. I feel like that it involves like ignoring the history of this country and just the history of in general. But go on.
Okay. Well, this is just purely talking about. This is just purely technical terms. So purely technical, no matter what their condition is, the fact is they're not producing output to the economy. That's just a fact. So if we take money from the people who produce and give it to the people who don't produce, then that's going to, because we need to understand that with a population as large as ours, there's going to be people on the margins. So there's going to be people who appraise, starting a new business, and then they're going to be discouraged by taxes.
But we're going to be talking purely logically. Say you have a person that has $100 billion. If you take $1 billion of that dollars and you disperse that amongst, the people that currently have nothing, you would imagine that they would be more productive today, wouldn't you?
Well, this is first of all making the several assumptions about a free market system. You're assuming that there's going to be a person with $100 billion, which I don't think there's going to be much inequality in a free market system.
Why would you assume that there would be no inequality in a free market system?
I think because the existence of job opportunities, and again, we shouldn't be resorting to studies, but I have studies to support that free markets lower inequality. But again, if we're just thinking about it, competition reduces
the logic of it.
Yeah. Let me tell you the logic. The logic is with more jobs and more job opportunities, more people are going to pull themselves out of poverty, and that's going to reduce inequality. And competition is going to divide the market among more players and more businesses, which is also going to reduce inequality.
Welfare does not alleviate competition. It's not like there's no competition.
Well, yes, that was what we were considering, and then you brought up the inequality point, so we had to diverge.
But you're making an argument against regulation when you're talking about lack of competition. That has nothing to do with welfare.
No, but taxes discourage production process.
If everybody is taxed if at a certain income rate at the same rate, how does that discourage competition in the way that you're describing?
Because if I'm making more money, I'm going to be taxed more heavily, and also I don't think you can finance welfare off of a flat tax. I don't think that would
finance off of a flat tax. I'm saying if everyone that makes over $100 million is taxed at the same rate, how is any of them any less competitive with one another? As long as the tax rate isn't 100%, encourages people.
The production process is not purely just competitive. There's also things such as savings, which turns out into investments. So there's going to be entrepreneurs who are denied loans because instead of their money being saved, it's going to be wrapped up in welfare instead, which is also going to reduce. So there's multiple ways in which it ripples out across the economy.
Well, wait, no. So, are you saying that that people are unable to save if they don't?
No, I'm saying there's going to be a certain amount of money that's not going to be put into savings because it's taxed.
So you're against all taxes? You think any tax?
No, that's not what I'm saying. But I'm saying to finance welfare, you need to increase taxes. So in a society with welfare and a society without welfare, the society with welfare has more taxes.
Yes.
And because of that, savings are going to be diminished, which decreases productive activity and economic growth.
Savings by who exactly? Maybe the people that are receiving the welfare can then lift themselves out of their poverty because they've been able to.
No, if they're lifting themselves out of poverty, they're spending the money on consumption, which is going to short-term do something, but long-term it's going to keep them in the condition of poverty.
But right now, you have your low wage job. You're making very, very little money. I'm assuming you don't want a minimum wage. You're making $5 an hour or whatever. You right now, your money can only go to your shelter and your food. That's it. That's all. The only place your money can go to. Then say that we have some sort of welfare system where now, okay, your food is somewhat subsidized, your housing is somewhat subsidized. Now that money can maybe go to you trying to go to school, and then maybe because of you going to school, I think that school should be free, but we're talking about the society now because you don't have to go to that. Now you can go to school, and then you can be more intelligent, and then you can go and do other things.
So there's several, things you've assumed there. So the first thing you've assumed is that you're going to be making $5 an hour. I think the market naturally lifts people with their wages. It naturally increases wages.
So you're saying though, if we didn't have a minimum wage, the wages would actually be higher?
No, of course not. I'm saying if we had no regulations, the wages would be higher.
Well, okay, but if right now we had no minimum wage, it would be, you would assume that there'd be people making less than $7.25 an hour because that's where it's
yes,
right?
of course, yes. But I'm saying
$5 an hour.
Well, you're not. Well, my society is not just this society without minimum wage. My society is repealing multiple regulations, and then again, if we repeal, what?
We can talk about regulations too, but we're talking about welfare. We're talking about the logic of welfare and how welfare
yes, we are
increase innovation and increase productivity.
Welfare increases productivity and innovation. Is that what you said? My thing kind of cut out.
It absolutely can.
It absolutely can, and that was because of the logic you talked earlier, where people aren't meeting the $5 job, whatever, right?
Going to their basic needs, and that they have nothing else on top of that. Yes, I think that they could be much more productive if they didn't have to work 60 hours a week to barely put food on the table.
Okay, well, again, you're just assuming this sort of idea of a minimal welfare state, which cannot exist because of the existence of welfare. So because welfare is politically controlled, it's always going to expand because voters are already going to vote to raise welfare, which is something that is just pure. Even from a logical basis, this could be established.
Voters are always going to vote to raise welfare, like an infinite amount.
Not infinite, but the welfare adjusted for.
Always vote to lower taxes. They will always vote to it into
that's just. Okay, if we look at actual polling data, most Americans don't actually support lowering taxes. I mean, let's look at Donald Trump lowered their taxes. He has one of the worst approval ratings of any president.
I think the pretty cut and dry. I thought you wanted to just talk about logic. If we want to look at
but you're making assumptions about welfare, which I need to address. So I'm saying the damage to the production process is. Wait, what?
If you don't want to talk about data, then address them logically. Don't appeal the polling data when you said that you don't want to.
Oh, sorry. Well, okay, yeah, that's true. That's my bad. But I was gonna use polling data as with the rest of my argument. But just from a logical basis, voters will want to raise their taxes because politicians want to be reelected, and as a result, they want to create programs. And so, because of that,
let's follow that train. You said voters will want to raise their taxes because politicians want to be reelected. Draw the dot between those two things.
The dot between those two things. I was drawing that. So, okay, Paul. So politicians want to be reelected. So because of that, they do certain things like create, quote unquote, create jobs. They don't really create jobs, but they say they create jobs. They do things like they expand the welfare state, which makes them look all, good to their voters. And they do other things that the government does because voters will have an instinct they'll have an instinct to support people because they think they're, helping them. And because of that, it's going to logically lead to the expansion of the welfare state.
So are you saying we'll expand infinitely, or what are you saying?
Well, I mean, infinitely is a very weird term. I mean,
well, you're saying that people have no agency, that they're unable to, I think that, we can assume that people are able to comprehend more things than just, we must spend more on welfare over and over and over again. I think that's not what the politician says. It's reasonably low. That's why we want to spend more on welfare, but it's not an infinite thing.
Well, okay. Well, again, wait, can you just repeat that? My Wi-Fi keeps cutting out.
No, yeah, it's no problem. So I'm saying that if we had the welfare system that we need, I think it's inaccurate to say that people will constantly just want to expand it more and more. And I mean, and let's say for some reason it's a little higher than it needs to be. I don't see exactly the drawback of that.
Okay, my argument for why it's going to expand more and more, it's because politicians want to be reelected, right? So politicians are like businessmen in this way. So businessmen try and get as much profit. Politicians try and get as much votes. So because of this, politicians need to add things to their record to say they fought for the American people and whatever. And because of that, voters are always going to vote to increase taxes, or not increase taxes, but increase spending, basically. And any increased spending, whether it's financed through deficits or taxes, is going to be detrimental to the fight against poverty because it destroys jobs and it destroys investment.
No,
that's my basic argument.
It definitely doesn't destroy jobs in the way that you're describing it, because, okay, but I think this requires going back to this. You have this assumption that you have this more equal society in a free market. That's correct, right?
Yes.
I think that's
well. Wait,
it doesn't exist in a vacuum. It's not like we're all starting equal. We would be starting, assuming to get to what you're talking about, in an incredibly unequal society. Like if you could, would just tomorrow you'd get rid of all regulations, everything, and you just, we would just be right where you wanted. Or are you arguing for some sort of transitionary period or something? Because like we're coming from a very unequal place. And I think it's silly to think that a free market would lead to more equality.
Yeah, I mean, again, I agree that we need a transitionary period. So probably something with a minimal welfare state.
What would the transitionary period look like, though?
Well, transitionary period would probably have some kind of I guess, how do I say this? Like adjustment or a rule book for how regulations are set. So like there'd have to be certain things that regulations do, like boxes that they check in order for them to be passed. And it would have a pretty much a basic income as its welfare state.
That sounds like more regulation, but
okay. It would be applied retrospectively to all regulations to like overturn them.
Okay.
So we would like slowly repeal the regulations.
Okay. Now, how would that not lead to more severe inequality? Because I think that's what it would lead to.
Because there would be less regulations on small businesses, which divide
regulations on the big businesses. So they're able to squash labor unions. They're able to grow larger with mergers and acquisitions. Well,
regulations disproportionately benefit larger businesses because regulations are a fixed cost.
It depends on the regulation.
Well, yes, of course, but all regulations have certain things in common. So all regulations are fixed costs, which means it costs a certain amount of money, no matter who you are, to start a business and comply with them, to hire lawyers and to replace your pipes if there's like safety standards. And so because of that, big businesses can afford to do this while small businesses can't. And the same is true of
regulations regarding like unionization. I mean, I feel like that almost
well, I would say a lot of right to work laws are regulations, and they have crushed our labor unions. I think.
Yes, I agree. They have hurt.
Yes, and antitrust as well has been applied to unions to hurt them, and I'm opposed to those things. So I think union density would actually be much stronger if there was no barriers to organization.
These large businesses, though. What about antitrust to stop these like corporations that have grown gigantic?
Well, okay, so first of all, I would say there's two sides to every story. So for antitrust, I would say that antitrust prevents a lot of businesses from lowering their prices because it's qualified as predatory pricing. So a lot of businesses don't lower their prices in order to undercut their competition because it's counted as predatory pricing. And I think monopolies on a free market are very unstable, and I don't think they're going to last very long. And there's a lot of reasons why.
So I want to address that. Because I think that
sure.
that's a notion that a lot of free market people have, is that monopolies essentially can't really exist in a free market. Is that would you
sure.
say that? So I think the easiest industry to think of that not being the case is banking, because banking there's so clearly economies of scale with banking that it would naturally just lead to a monopoly, and that monopoly could effectively, if you don't have any regulations, could do some pretty tyrannical things, for lack of a better word.
Sure. So the sort of, I guess, the assumption you've made is that the only thing consumers care about is economies of scale, which isn't true. Like a business makes money not based on how cheap its product is or how efficient it is. It makes money based on how best it is to meet consumer demand. So just because a bank is more efficient or has better rates doesn't automatically mean that it's going to attract the most consumers. The bank that's going to attract the most consumers is whatever they demand.
Okay, yeah, and I would say with banking, it's largely better rates, better more availability in terms of like telling machines where you can go and exchange your money like that. It just is so much nicer when a bank is larger, that it just makes sense that people would gravitate towards the larger banks.
And if you take antitrust policy, then you're necessarily just reducing their quality of life, because you're talking all this stuff about how great big banks are and how good they are to the consumer.
Wait. Let me be very clear. I don't think that big banks are good. I think that, frankly, I think there's a good argument for like national.
So if big banks are bad, why are consumers going to buy from them on a free market?
If they have no other option.
They are going to have other options.
Banking naturally, if you just leave it to a free market and unregulated market, banking will naturally lead to this unregulated monopoly.
Why?
Well, that's why, I mean, I don't want to bring, but like you saw this, like with the repeal of Glass-Steagall, you saw these banks grow larger and larger because banks are just naturally going to get larger because people are going to be more gravitational towards this larger bank, and also it has incredibly high startup. To do a bank requires a ton, like talk about startup costs. Like you need a lot of capital upfront to start a bank.
Okay, well, first of all, so there's a few things. So when we're talking about this notion of natural monopoly that you need a lot of startup capital, that doesn't mean competition won't work. There's still going to be competition, and
which bank would you rather go to? The one that has telling machines at like just about every place. They're able to provide better interest rates, and that they're going to be that they're not going to go under because they're larger, because a lot of people have their money into it, or a small bank that you don't really know a lot about. They could in your society there'd be banks that go bankrupt from time to time where you would lose everything. Which would you be more inclined to put your money into?
So let me answer that question. So the thing is, when you're talking about this, you're doing all this stuff about how great like big banks are or whatever. So if it's true that the bank is providing a much better service than any other bank, then that just means that the free market is being effective at raising quality of life for the consumers.
Here's the problem, because then the bank grows so large where then they're able to do whatever they want. They can set their rates at whatever they want because they've crushed all of their competition.
And then, so as soon as they start doing that, suddenly there's going to be a lot of demand for competition, and then the competition.
But because this is a multifaceted thing, and so maybe this other they're able to set their interest rates at less advantageous. They're able to set rates that people don't want. But because they know that the smaller bank is probably going to go under, there's not going to be a lot of people. They know that they're not going to have their teller in their town. If they go to the next town over, they're not going to be able to have get cash out of the machine. They're going to still be at the larger bank because there are too many reasons. But the bank can start doing things. They can start and there's all sorts of predatory practices that banks can do.
So there's two things there. So there's one where you're saying like people are going to stay with the banks even though it's not going to be the optimal rate of interest or whatever. But if they are doing that, then that just means that there's something superior about the bank, that the choice of the people staying at the bank is superior. So if it's due to geography, then that just demonstrates that people want the convenience, and even if they're getting subpar loans, like they're still going to want the convenience. And so why
not have both? Why not have people are able to geographically go to the bank they want, and we have regulations that prevent them from the predatory practices.
So what are these predatory practices?
You can talk about different predatory land. There's all sorts of things that like banks can do if they're unregulated. That
predatory loans.
I mean, if we didn't have any regulations, I mean, what's stopping a bank from just preventing you put your money in the bank and they're like, oh, okay, we don't want to what is preventing that? Like, what is it preventing?
Preventing what?
Like fraud and all sorts of different things.
Fraud. If I commit fraud, I'm not going to stay in business very long, even on the current market.
You can say that to the person that just lost everything, though. Like it's
that already happens in I don't like using examples again, but I mean just look at Bernie Madoff. Like that already happens in our heavily regulated system.
No! Oh my gosh, no! That's a failure of the regulatory system.
Yes, and that just proved the regulatory system is ineffective.
People like Bernie Madoff would be all over if we didn't have regulations. Like,
how do you know that? Like, what logic supports that? They would be less all over because there'd be more competition and less regulations.
Why wouldn't there be like places that sell like used cars? They sell like used cars that are just awful inside, but that they can get away with selling them to people.
If their used cars are awful and people are buying them, that indicates something about the people's preferences, that they want those used cars. In which case, you don't have the right to deny that to them.
No, it indicates that they don't have perfect information and they're getting ripped off by people that have no interest in actually providing a good product.
So, okay, well, the market, so this problem of perfect information,
if they sell a bunch of cars that have bad brakes, well, eventually they'll go out of business. Well, that's easy to say that people it's hard to say the people that got in a car crash because the brakes didn't work in the car that they bought.
That sounds like an issue until you realize that on the marketplace, it already naturally solves this issue. So we have things like Carfax that already verify, and like the Better Business Bureau, like these aren't issues on the market.
How does Carfax know that that business isn't providing right? Because some people have to
consumer reviews, stuff like Yelp.
Bad things have to happen to them, right? Like, how does someone find out?
And the same is true of regulations. So if the car's brakes are bad,
it says, hey, you can't sell cars that have bad brakes. Companies aren't allowed to do that.
Yes,
But
and again, in both instances, there's going to be suffering before we find the thing, but the market is going to be more efficient at being a self-correcting mechanism.
Because once we have the regulation that says you can't sell cars with bad brakes, doesn't happen anymore. You don't have a regulation about that. There's a car company, they sell cars with bad brakes, they go out of business, maybe. Next one, what's stopping them from doing it too? What's stopping the next one? What's stopping
Again, it's going to be up to the consumer sovereignty. So again, this ties back to the example of Target and underlying industries. Consumers want to have a sort of security and stability. And because of that, if a car company is appraised by certain nonprofits like underlying industries or the Better Business Bureau, then they're going to have more business. So there's going to be natural incentives for them.
But there are people that still go to these things because, maybe they sell a cheap car. Maybe they're like, oh, it's a good deal car. But then they go and it turns out, like I said, the brakes don't work. They get in a car crash and they die. Like, I mean, it's like you can say like, oh, they'll go out of business eventually. But I'd rather live in a world where the person doesn't have to get in the car crash for us to know that a business is bad.
Well, in both instances, you have to get in the car crash to know that it's bad.
No. Because right now we have regulations that prevent that. We have laws against.
Yes, and in a market society, consumers would prevent that through their demands of certain.
No, but the only way for them to know that is for people to get into a car crash. Don't you?
The same is true of regulations.
How? How is it true for regulations? We have regulations that prevent that. You're not allowed to do that.
Yes, but the period before we had those regulations that had to happen, like that, we're just going in circles here.
Yes, the period before you had to have but once we have the regulation now, it doesn't happen anymore, does it?
Wait, it wouldn't be in the market either, so it wouldn't have happened in the market either. Like
because the place goes out of business. But then that's what I'm saying. What's stopping do next one from doing it?
I told you, like the consumer sovereignty. So they're going to demand certain. They're going to realize that.
But the only way that you know that this place doesn't sell good cars is to have some people drive.
Or you can get a third-party appraiser to appraise it beforehand, which consumers will demand. Which is my entire point.
But consumers don't have like these perfect information where they're able to like constantly.
Well, yes, but the market naturally evolves more information. So again, Yelp and Carfax are just two examples of the market creating more information.
But those exist within a heavily regulated thing where we already have like certain safety standards where people are like, okay, we know the bare minimum, like these certain things are going to happen, and then you can go from there.
Okay, well, again, and in both cases, if you want to talk about perfect information, the government has almost no information at all in terms of.
What does that even mean? That the government has no information?
Or not no information, but the government doesn't have perfect information either. Like it doesn't know what all 300 million of its citizens are doing.
Perfect information, though. Yours does.
Wait, what?
My system doesn't rely on this idea that consumers will just be these all-knowing beings that are able to perfectly.
I didn't say that. I'm just going to say that the market is a preferable process of self-correction, and that there's other downsides to regulation.
For some things, it certainly is, but there are regulations that are very, very necessary. Like you're getting food that doesn't have
okay. So I want to back up here. Okay, I'm not an anarcho-capitalist, and I should have made this clear before the debate. Like, I'm a minarchist, and okay, wait, not like a minarchist, like a classical liberal, but like, if there's certain regulations, like I'll give an example, like certain regulations that force companies to have like firewood or not firewood, like be fireproof or like public works projects. Like I'm not opposed to those. Like what I'm opposed to is the mindset that every problem in society needs to be fixed with a regulation. And this is like what Ludwig Mises talks about is like the interventionist mindset. Like I'm not opposed to every regulation and intervention as long as but I'm opposed to the mindset that we need to intervene into an economy in order to fix it. So I just wanted to make that clear.
I mean, I don't think that everything. I don't support some sort of like complete planned economy, but I think that there are where regulate. I think that we're both not on these completely opposite ends of the spectrum. We both agree that some regulation is necessary. We just don't know.
Yes. Just I don't like the mindset that we need to intervene in the economy to save it. That's all I'm saying. But this has gotten way far from welfare. Like,
it has.
Okay.
Well, my girlfriend is starving, so I'll probably have to go in a few minutes. Is there any
last words? I wanted to bring this up because I couldn't. I had a few studies pulled up beforehand, so if you want, I can just read them off. So sure. Okay, so
you want to send them?
Yeah, I'll send them. So these are just different studies looking at the efficacy of welfare states. So this just makes my position more clear. So the World Bank did a study. They found that. Or no. The Government Accountability Office did a study on food stamps, and they found that people who don't take food stamps are people who don't take food stamps are less likely to be undernourished than people who are on food stamps. I can send that, and then And the World Bank did a study as well where they said social spending has very little impact on child mortality, and it's more influenced by things like demographics, economics, and income inequality. So I can send that as well. And then I just have other studies that indicate that certain free market reforms like controlling inflation would have equal effects to effects of increasing social spending. So this sort of ties into the notion I was talking about at the beginning, where yes, welfare might have some benefits we can talk about, but at the end of the day, both systems solve the problems of poverty and inequality.
So I think that just like I think that you brought up that like for the second study, it was like the social spending doesn't lead to like child mortality is more of a more affected by income inequality, right? That was like what you said basically?
No, well, child mortality is more affected by factors such as distribution of income, economic growth, and demographics.
Okay, but like I mean, it'd be weird to talk about demographics while ignoring the vast disparity between like certain demographics in this country. Like when Black Americans, for
again, I would say that
versus white Americans, it'd be weird to say, oh, well, demographically, this is just a demographic issue. Like, do you see what I'm saying? Like, that'd be you can't separate the two.
Yeah, well, I would attribute that to the slavery and its legacy, and not necessarily to anything regarding the free market. I'm
just saying that. I think that do you support some sort of redistribution to alleviate the negative effects of Jim Crow, slavery, all the different things?
In an ideal society, no, but since there's already issues caused by the government, that would be necessary for a transitionary period.
Well,
I don't support giving money to Black people. I support, or if I was to support this, it would be infrastructure funding in like Black communities or something.
I think the infrastructure funding is important. I'm glad we can end on a point of agreement. I also agree with infrastructure spending in dispossessed communities. So I'm glad you sent all those. I'm going to look through all the studies. I actually have that book that you brought up. For like what is it called? Like
Debunking Utopia.
Debunking Utopia. I actually think I have it. So maybe I'll jump ahead in my reading and take a look, and then maybe we can do this again sometime.
Okay. Well, I just want to say before I go, I appreciate what you do on this channel, and I'm not a hive mind, and I understand that Medicare for all is better than our current system, and I appreciate that you fight for Medicare for all. I think I'm not blind. I see that it's better than the current system, and I don't think it's ideal, but yeah, that's just what I want to say.
I definitely appreciate you being willing to like give that level. I actually really appreciate that, and I'm sure we honestly probably have all sorts of agreement in terms of like ending like money in politics and like corruption and stuff like that. We probably agree on like ending the wars and stuff. So I'm sure we have all sorts of agreements that we have.
Yeah. Okay, I'm gonna go since you said you had to go. Bye.
All right,
and thank you for the debate.
Yeah, you too.